Bitcoin is meh compared to the trading volume Tether. So number one traded crypto on the planet is the US dollar. It's a token. And what's going to happen is a tokenization of all assets. It's just unstoppable. Yeah, there'll be pushback, there'll be bumps in the road. It's just a better way to transact. And the reason I say it is I came from futures. I saw what futures did to all our assets, most notably US Treasuries. I remember being like I am now on the phones in the trading pits, and the guys in New York would get so pissed when the futures were moving the market. I'm like, okay, it's 20 times leverage, and there's these massive guys trading in and out. It'll move the whole market in the world. And that's what tokenization of cryptos is doing. It's just a better way to transact.
The market Mavericks, consisting of Gareth Soloway, Mike McGlone, and Scott Melker, three trading legends, had a recent podcast revolving around the current state of the cryptocurrency market and what to expect from the developments. The US dollar has once again surpassed 50% of trading volume in the cryptocurrency market, partly due to the influence of exchange-traded funds. With this, the market Mavericks note the rising importance of Tether as a stablecoin when it comes to trading. They also believe that tokenization of assets, including cryptocurrencies, is unstoppable at this point, and represents a much better way to transact compared to traditional methods. Regarding the Federal Reserve's upcoming decisions, the market Mavericks speculate on the likelihood of a rate cut being pushed back to November, according to indicators. There's debate over whether the Fed will adopt a hawkish or dovish stance, given the current economic environment of inflation pressures and speculative frenzies in risk assets. We will now bring you clips of the discussion as they share their latest crypto outlook. Give this video a like and subscribe to the channel for your daily dose of crypto news. We hope you enjoy.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Last year when everybody was depressed and the SEC was attacking Coinbase and Binance, there were only 3,000 people. This year there were 15,000 people. Ooh. And the booths were not just accountants and bankruptcy lawyers like last year. So it was a huge improvement, I would say. Vibes are good. Obviously, we had sort of a change in the political winds over the past few weeks, so I think that sort of boosted the mood. Just generally positive, people excited about crypto in the United States. Again, it was great to see. Well, obviously, we've chatted since the surprise Ethereum ETF approval on the 19B40s, and we saw that 30-40% move on Ethereum. I guess remains to be seen what will come next from that. As for Bitcoin, exactly right. It's ranging sideways. I've expected it would range sideways for months. I guess we're about 2.5 months into that assumption. I think it could be 4, 5, 6. Wouldn't surprise me at all, especially in context of what we see after each halving. But it's nice to be trading in the top of a range instead of the bottom of a range, right? Because that means that we'll probably at least go test the highs around 73,700. That's the point where people will become irrationally bullish. They'll get exuberant. They'll start talking about 500,000. And then if we go back to 60 after that, they'll be depressed. They'll be talking about 12,000. It's all over, going to zero. Because that's what makes charts, and that's what makes supply and demand and support and resistance. But right now, I mean, I'm happy it's at 71,000. Doesn't mean anything to me until we're trading comfortably over, those 74 highs of the all-time high.
So just looking at your chart here, I'm seeing these orange kind of wave areas. Can you explain to people what that is?
This is an indicator that I use that my buddy Wick, you guys, Zero Hedge on Twitter, may have seen that he just finally got me convinced on, at least for a really good screening tool. And it just generally indicates there's volatility coming. It's called it's squeeze shading. So just happens to be an indicator. I usually used to use clean charts here. This has just sort of become my default chart. But at the end of the day, we're just ranging in my mind, right?
Very cool.
in this big blue range. Nice that we bounced from that bottom, got some signals, but yeah, I think now we bounce between 67 and 74. But what do I know? It's just a chart. It's a picture.
In terms of the alts, we've seen, and this has kind of been interesting to me, is that I've seen certain alts make moves. Like Pepe's been pretty hot. Obviously, the meme craze, GameStop, what's going on there is probably influencing it. But even other ones like Chainlink's had a move up recently, and a few other ones. Why are we seeing like some alts run, but then others not? Is it just more story related to each individual one now?
Yeah, I think you get these sort of buckets of narrative. AI coins run, even though most of them have nothing to do with AI, or real world assets coins run, or obviously the meme coin casino going wild. You may not have seen, but there was a story that there were 500,000 tokens launched on Solana in 1 month last month in May. 500,000. Right. So that's obviously something that's a good signal of exuberance and insanity, which was actually my signal that we were topping in March that we discussed, quite a few times. That's only accelerated. But really, I think that most altcoins are still down from last cycle, 90%. Right? We haven't seen this massive altcoin move to the upside across the board. I don't know if we will. If the 4-year cycle is correct, that's more of a 2025 thing or end of 2024. But really, I think that we've had these sort of baskets of interest, but the bulk of the Bitcoin move has come from the spot ETFs, and that money doesn't trickle down into altcoins in the same way it used to. Now, an Ethereum move to the upside with a lot of volume and excitement, that could definitely trickle down further into the ERC20 and a lot of those older tokens. There was a lot of people that showed some pretty compelling evidence months ago that it was actually massive Solana whales that sort of started the meme coin trend, especially when Solana was largely undervalued, had been beaten down by FTX, because it was a way to capture a ton of TVL and volume and excitement in the Solana ecosystem. Because, as you sort of mentioned, if you want to trade these meme coins, you have to own Solana. Right. Trading them in Solana as the base currency largely means you have to buy Solana, trade in and out, come back to Solana. Obviously, that raised the prices.
The market Mavericks continued the discussion by discussing several key points related to the cryptocurrency market. They believe that there's a notable improvement in sentiment compared to the previous year, with more attendees and diverse booths at cryptocurrency events. The recent political developments have also boosted the mood, with people in the United States showing excitement about crypto again. The surprise approval of an Ethereum ETF led to a significant price increase in Ethereum. However, the future implications of this approval remain uncertain. Also, they noted that Bitcoin's price has been ranging sideways for several months, as expected by some analysts. This sideways movement is seen as preferable to trading at the bottom of a range, as it suggests the potential for a test of previous highs. The discussion touches upon the influence of Solana whales on the trend of meme coins, especially within the Solana ecosystem. This trend was fueled by the undervaluation of Solana and the need to use Solana as a base currency for trading meme coins.
I've been talking about TLT for a while, but if you take GLD divided by TLT, total return, see that little white line there? That's a reversion waiting to happen, and it's going to happen suddenly after gradually. I mean, it just looks to me it's more elevated than at the peak in 2011. And one thing that's really different is when people tell me U.S. long bond yields are going to go up, and I've heard that for 3 decades, actually more than that, every time, and I look over at the rest of the world, is what I show you in orange here is the yield on the U.S. 10-year right now at 4.3% is about 100 basis points above the average of the top 5 other economies in the country. The significance, the last time we hit around 2011, the difference was the yield was about 160 basis points less. So to me, the inflection point that's going to happen on a global basis, at some point, U.S. yields are going to plunge, catch up to the rest of the world, but it's going to take something significant. And the number one key risk for that is the U.S. stock markets. I just want to show a few other charts so we can tilt over from that, because to me, this is going to start. It might have already started. And it just needs an inflection point. So if you look at, one thing I enjoy is you look at Bitcoin, Beta, S&P 500, and gold. If they end the month now, it's another record high close. They're all just hovering there. But one thing I like to point out is a very simplistic way. And Scott knows I've been kind of beating on this one a little bit. If you just look at that Bitcoin to gold ratio, I'm still worried about it. And there's one simple reason to be worried about is when the stock market gets too high. All I show you is the S&P 500 divided by its 100-week moving average, as simple as it goes. You go back to 1999, and this was the longest period in history. And that's the only time we've ever been able to get that Bitcoin gold ratio elevated. But anytime it gets to these levels, you're supposed to be selling Bitcoin and buying gold. It's just the way things work. That's what I want to see change. I want to see Bitcoin go up when the stock market goes down, but so far it's very elevated and Bitcoin showing a little bit of divergent weakness. But I want to show you about the cool thing about this simplistic chart. Again, this is just taking how far the S&P 500 is 20% above an 100-week moving average. I can do that versus everything. I look at that same measure versus gold versus silver. Typically, when it gets this expensive, you want to be buying gold and selling silver. Same thing, when it gets this expensive, you want to be buying gold and selling crude oil. And that's what's happening is crude oil's Bitcoin, gold is breaking out versus crude oil, stuff like that. So the macro to me is quite significantly tilting towards a little bit of recession at some point. I'll end with this one little chart. Let's go back 30 years. And what I show you here is just in orange. That's just the S&P 500 divided by GDP. It's the highest in our lifetimes, with the exception of that little spurt we had for the COVID. And CPI is at the same level as when we went to the peak of the internet connection. Some of us, the internet boom. Some of us remember trading that well. CPI is the same, 3.4%. The difference is it was heading higher then. And the reason part of it was heading higher was because the stock market was going up so much, but stock market peaked. S&P 500 peaked at right then about 1.5 times GDP. I'm using GDP in trillions times 100. Now it's almost 2 times GDP. It's just that expensive. So to me, to expect inflation to go down, you need the stock market to go down, and I think the Fed gets that. The point is, I think what Chairman Powell did is he made a big mistake when he pivoted towards warning the market is going to be easing back in December, and that's created this speculative frenzy in all assets, which is kept inflation elevated. And it's just silly to expect with the total market capitalization of U.S. stocks at 2 times GDP, which is the most in our lifetimes, not to be the most thing that matters with everything. Then that's all that matters. I mean, seriously, when stock market goes up, everybody feels good. Inflation goes up, market's great. Stock market goes down, it's all the opposite. It's all that matters. Like I said, it's the most expensive in our lifetimes. You got to go back to the 1930s. And I've been saying this for a while, but here's a key fact: is inflation's going now. Inflation was heading lower. The reason it's sticky partly is because we've had this big breakout in the stock market. Now we all know why. The tilt from Powell. There's massive money still in the system from all the money pumping from COVID, and then the inordinate fiscal spending that has never happened to this extent, with 6% of GDP outside of a war or recession.
What are your thoughts on the increasing dominance of the US dollar in cryptocurrency trading volume, and how do you see this trend evolving in the future? How do you believe the tokenization of assets, including cryptocurrencies, will impact traditional finance? And what opportunities or challenges do you foresee in this shift towards tokenization? Share your thoughts in the comments section below, and continue the discussion. If you found today's video informative and want to stay updated on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and turning on post notifications for your daily dose of crypto news. Be sure to stay tuned for our next episode, where we'll cover more about the fascinating developments in the crypto space. Thank you for watching, and we look forward to seeing you in the next video. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.